This is a question from cash flow statement. It may be a question for 3 marks. So individual bits are also there, A, B, C, D, E, F. I am trying to explain it in individually. Now it is given in the balance sheet that equity share capital last year it was 1,50,000. In the current year it is 5 lakh. And proposed dividend last year it was 12,000. This year it is 30,000. In the question number bit 1, it is given that question is silent. If the question is silent, just remember that proceeds from issue of equity share, that is the current year minus previous year. Current year it is 5 lakh rupees and previous it was 1,50,000. So proceeds from issue of equity share comes to 3,50,000. That is current year minus previous year. Proposed dividend last previous year it was 12,000 and current year is 30,000. Remember that the proposed dividend of the current year is to be treated as contingent liability and it should not be taken into consideration. Right? I hope that you must be knowing about the contingent liability. So the previous year's dividend, that is 12,000 rupees, is to be expected to be paid off. So now the cash flow from financing activities comes to 3,50,000, that is inflow of cash, and 12,000, that is outflow. So net is 3,38,000, that is cash flow from financing activities. Right? Next one is bonus shares issued in the ratio of 5:2. Remember, when it is given that bonus shares issued in the ratio of 5:2, 5:2 means for every 5 shares, 5 equity shares, 2 bonus shares have been issued. And as we know, bonus shares are issued by capitalizing the reserve, means there will be no inflow of cash. So just you see, for every 5 shares held, 2 bonus shares issued. So for 1,50,000 there is opening capital. For 1,50,000 bonus shares issued will be of rupees 60,000. So the total proceeds from equity shares will be how much? 3,50,000. That is difference between the opening and closing, 5 lakh and 1,50,000 minus this 60,000 for which we are not going to get any cash. So proceeds from issue of shares will be 2,90,000 and dividend paid is 12,000. So thus the cash flow from financing activities comes to 2,78,000. Right. Next one, third one. Machinery purchased for rupees 50,000 by issue of shares at par. We have already gone through the portion where it is given that issue of share for consideration other than cash. Here we are issuing the shares not for cash but for purchase of machinery. So now just don't relate B and C. All are individual questions. Now I see proceeds from issue of shares will be how much? 3,50,000 minus 50,000 worth of shares that has been issued towards purchase of assets and less dividend paid is 12,000. So cash flow from financing activities is 2,88,000. In the fourth case, it is given bonus shares issued in the ratio of 3:2 and underwriting commission is paid rupees 20,000 by issue of shares. I hope you must be knowing underwriting commission. That is the commission paid to the underwriters who is related to or who is assisting us to issue the shares. Right? So proceeds from issue of shares will be how much? 3,50,000. And it is also given that share issued at premium. Question number D. Shares issued at premium is 25%. So now see, proceeds from issue of shares is 3,50,000 and 25% premium is there. So 25% of 3,50,000 is to be added. So total comes to 4,37,500. What you can do, you can also write the premium separately. That proceeds from issue of shares 3,50,000 and the issue securities premium. You can also show it separately. And dividend paid is 12,000. That is to be deducted. And the net value is 4,25,500. That is the amount we have collected, or there is the inflow cash from issue of shares. Then come to bit number 5. It is given that bonus shares issued in the ratio of 3:2 and underwriting commission is paid 20,000 by issue of shares. So for every 3 shares, bonus shares 3:2. For every 3, we have already done it earlier. For every 3 shares held, 2 bonus shares are issued. So for 1,50,000, bonus shares issued is equal to 1 lakh. So proceeds from issue of bonus shares will be how much? 3,50,000 gross minus 1 lakh towards bonus shares and 20,000 towards purchase of assets. So net inflow of cash by issue of shares will be 2,30,000 and dividend paid is 12,000. So cash flow from financing activities will be 2,18,000. And last one, additional shares were issued on 1st July. Remember here date doesn't matter, because in shares the dividend are not to be paid on the shares issued in between. So proceeds from issue of shares will be 3,50,000, dividend paid will be 12,000. So thus it will be cash flow from financing activities will be 3,38,000. These are the small questions that is a part of the question itself. So you should be very careful while working out the cash flow statement. It is very important. And as such, we know that there will be a question, practical questions will be there, maybe from operating, investing, or financing. So keep preparing properly and make it a habit that every day you have to work out both accountancy and mathematics. Those who have taken without regular practice, you may forget, right? So take care and keep sharing the links and follow us.